let's talk real quickly about Bitcoin, because you may see that Bitcoin has fallen fairly sharply over the last few sessions. Now, we certainly are trading below the December highs that we had hit, but we've actually fallen today. And in fact, let me just go ahead and bring up a little bit of what we're seeing here in the markets before I get into Bitcoin. I just want to broadly talk about what we're seeing right now. First of all, we are seeing the NASDAQ 100 that has been falling, and it has really kind of led the way. When you look at the price of, say, let's just look at QQQ. That's the easiest way to see the NASDAQ. You'll see, let me zoom in here so you can really see that latest sell-off there. Okay, that looks very similar to what we saw back in December after we hit that peak. And notice what we have here on the chart here. Let me get my pen so you can see a little more clearly. But we appear to have what? We appear to have a double top right there. Do you see that at about the 540 level? Right there. And here come NVIDIA earnings, right after the double top in the NASDAQ 100. Now, the NASDAQ 100, the reason I'm talking about that in terms of what's happening with Bitcoin is because the NASDAQ 100 is probably one of the best proxies for determining what kind of risk level or risk appetite exists in the market, because these are these top 100 non-financial companies taken from the NASDAQ Composite Index and put into this NASDAQ 100 index, which I like to invest in for the long term. As you know, it's been my niche market now for many, many years. It's an area that I like to invest in, and I also like to trade around that position. And right now, we're seeing some selling pressure. The volume that we have seen here, as you can see on the sell-off, not incredibly, not terrible. I mean, compared to, say, like back in July, look at this sell-off here, right, which we saw the sell-off pretty sharply here. And then, of course, we got a turnaround. Well, that's part of what's happening here. So the NASDAQ 100 showing signs that there is a little bit of a fear of risk on kind of trades. We see that the volatility, the VIX, has perked up to about 19. Again, that is not huge. That is not anything compared to what we saw back in December. Lighter volume and less in terms of price acceleration and what we might call momentum there in the volatility. But we look across other areas and we'll see that bonds are up, and they're up, moving up nicely. Look at the 30-year bond here getting a nice 1% rally. And this coming today. Now, what's that about? Well, that is due to several things. We have the U.S. dollar also, you can see here, trading near the lower end of its range as it continues to come down from its January high right around the time of the inauguration. Remember, we talked about that inauguration tends to be around the peak for the dollar in terms of at least the last time we saw Trump come into office. And so it does appear to be doing the same thing. The dollar is rallied in on expectations of a Trump victory. And then once the inauguration came and then Trump sat down in the Oval Office, the dollar starts to fall on his policies. So that is what we are seeing. That's not a surprise. Gold is pulling back here, which may seem surprising because you have yields going down and the dollar also showing weakness. So you would say, why is there selling in gold and silver? Silver having a nearly 2.3% sell-off today, about 31.85. Gold sitting at about 29.17. Well, a lot of this is profit taking. Also, look at oil. Oil pushing to new 2025 lows, if I'm not mistaken. Let me take a look at that Brent chart. Yeah, I would say that we are we're at new 2025 lows for oil. That is the strategy, by the way, of the Trump administration, is to drive this price of oil down, thus driving down inflationary pressures. So two things are happening here, and you don't want to miss it. There is fear broadly in the market right now, as you can see from that rising VIX. It's not a huge amount of fear. It's just kind of a normal kind of volatility move that we see occasionally. But along the way, we're not seeing a corresponding spike in the dollar. Now, in the past, we would see those two rise together. There's fear and people would run to the dollar, okay? But now there's a little bit of fear and they're not running to the dollar. It appears they are running to what? It appears they're running to bonds, right? Look at bonds up today, right? Bonds are up. Natural gas is up. There's just a few things that are up. And one of the things that are up today are the 30-year bond, right? The 10-year note, the 5-year note. You know, they're all getting a bid today as rates fall and as the dollar also weakens. Now, and we're going to get into this more as we go, but one of the important aspects of this is the fact that if you have oil prices falling, that's going to take some of the air out of the sails of inflationary pressures. So that is overall good, net good for inflationary pressures here in the U.S., so that's good. Secondly, we also have the dollar coming down as well, and we also have signs of economic slowing. So why would that be positive? Well, it's positive because everyone has been expecting that the Fed is not going to do anything this year in 2025, maybe 2 cuts, okay? But this is building the case that we do need rate cuts. If the economy is slowing, and if inflationary pressures such as, i.e. oil prices are falling, then there's no fear of cutting rates because inflation is not soaring the way that it had been in the past. So what's happening right now is increasingly giving a green light to the Federal Reserve to go ahead with a few more modest interest rate cuts, which is exactly what President Trump has been pounding his hand or fist on the table demanding, is rate cuts. He wants rate cuts. Well, things are lining up pretty well based upon latest price action for rate cuts. Now, let's get back to crypto because I want to talk about Bitcoin now. Because Bitcoin, as you can see, falling to 87,000. Now, you can see that we had been in this period of consolidation where we were mostly holding 90,000. And we had held that area since the election. Remember back in the election, the price was right around 70,000. After the election after the victory for President Trump, we saw that consolidation get broken. Let me get my pen again here so I can draw. I like to draw on these. Now you can see we had this kind of consolidation right in here, And so it was just back and forth, right? And we finally got the election, the volume accelerated, and the price broke out, and we fell into a new consolidation up here, 110 to 90 or so, okay? We've been going back and forth here. But now we broke down below that area, but the volume here is not convincing, okay? The volume is not very convincing, and we have a lot of noise going on right now too, which would build the case for even seeing some sort of breakdown like this. So let me get a bit more deep into this for the sake of time, because we do have many things to cover today. So Bitcoin hitting a 3-month low, and think about that. Just think about what I just said. Bitcoin hit a 3-month low, right? It seems pretty wild. It seems like, wow, Bitcoin's falling. Why? But it's a 3-month low, right? So let's just talk about what's behind that 3-month low. Well, as I mentioned, we have risk-off sentiment, right? We are seeing that in traditional markets. The NASDAQ 100 is a good proxy for that. You'll be able to kind of tell what's going on in the broad risk markets by looking at that NASDAQ 100. So we have seen selling pressure there. That has helped pull cryptocurrency lower. We also have another thing that I haven't mentioned, and that is the yen. Let me open up the yen for a minute. FXY is a good way to track the yen with an ETF. And we called a new position uptrend on the yen back on February the 7th. So we put that in the Robinson report to you. We look for those new position uptrends, and look at what's happening now with that, of course, that was a little bit ago. Now we're seeing the yen continue to push higher, and that's a traditional safe haven asset, okay? And so that is signaling what I would say is market-wide caution at this point. And so that's also explaining some of the action that we're seeing. We've also had a lot of meme coin, action going on, which is, I guess part and parcel of the crypto market. We've had a frenzy in speculative tokens like Trump, the Trump coin. We've also had the Libra coin. That has pulled capital away from Bitcoin and some of the other major cryptocurrencies. And so that liquidity has been somewhat diverted from the productive crypto sectors into some of these, meme coin markets. So too, we also have some disappointment over Trump's seeming inaction over the Bitcoin strategic reserve. Hopes for that have yet to materialize. So we haven't seen that yet. We also are seeing state-level Bitcoin reserves that were proposed in Montana. Let me open up this right here, the bitcoinlaws.io. Pretty neat little website. You can follow along and see what's happening at that level. Hold on one second. Let me get that chart back there. There it is. And so you can see bitcoinlaws.io. Encourage you to check that out if you're interested in those state-level Bitcoin reserves that have been proposed. So we did get news from Wyoming that investment into Bitcoin has failed. That's a dead bill. We also got news out of North Dakota that that bill has also failed. And then we also had news out of Montana where its bill to invest proceeds, taxpayer dollars into Bitcoin had failed. So you had three of these expecting, and there, by the way, is over 30 states. Look at all these states that have proposed something to do with Bitcoin. There's 61 total measures, 33 states proposing something related to Bitcoin, okay? And so over 30 states are exploring some sort of legislation involving Bitcoin reserves and digital asset investments, and this is a good website to follow along. But those failures in those states are also hampering sentiment in the Bitcoin market, as you could imagine. And also, let's not forget that we just suffered the largest crypto heist of all time. That was the Bybit exchange hack, where $1.5 billion worth of Ethereum, 401,000 Ethereum, were stolen from a multi-signature wallet at the Bybit exchange. Okay, now this is causing fear, of course, among crypto investors, just as FTX did, which was, by the way, 1/3 of the size of this crypto heist. Okay, we go back to Mt. Gox. That was 1/3 the size of Bybit. So Bybit, by the way, is one of the larger exchanges, and it, according to a proof of reserves audit, has made itself whole through loans and emergency lending and all of this. So it's there. They're still allowing withdrawals. So we don't have an FTX on our hands quite yet. And I don't know if that's actually going to happen, but there's the fear around it. See, these fears create this kind of anxiety around the price. And this is your opportunity, because nothing fundamentally has changed, right? There's nothing fundamentally that has changed. And we could even say that even if the Trump administration doesn't push strategic Bitcoin reserves through, that doesn't matter. Bitcoin was on its way up regardless of what these guys are going to do. So we're not really too terribly concerned about all of these extras. Now, as far as this latest crypto heist, what does this tell you? Did they hack Bitcoin? No. Did they hack Ethereum? No. They hacked an exchange where people put their crypto, and we've told you not to put your crypto on these exchanges. And so we encourage you to keep it in your hardware wallet. Nobody lost their money in a hardware wallet here. This was on a public exchange, right? Albeit a very creative hack, albeit a very bizarre hack, but nonetheless, it was not a hardware wallet. sitting in your desk or wherever you keep yours. That was not hacked. It was an exchange. So keep that in mind. Another exchange got hacked. That is not news. That is pretty common anymore, isn't it? Now, we also have, as I mentioned, growth slowdown concerns here in the U.S. We got the latest U.S. services PMI that hit a 22-month low. That's sparking economic slowdown fears. This morning, we got the Conference Board's Consumer Confidence Index. That fell to 98.3 in February. That was well below the Dow Jones estimate of 102.3. That's the largest monthly decline we've seen since August of 2021. So investors are reducing exposure to riskier assets like Bitcoin in times like these, but should they? Well, what is this action really doing? Well, these economic concerns about a growth slowdown call for what? For higher rates? Absolutely, positively not. They're calling for lower rates, right? If you have an economic slowdown and you have interest rates stubbornly high, and inflation is dropping because oil prices are dropping as well, then what you have is a recipe for rate cuts. What do you think Bitcoin is going to do, or any of these markets are going to do, if the Fed says, oh, we changed our mind, we're going to cut more rates, or we're going to cut rates more than we expected in 2025? That's going to jolt the markets higher, right? That hasn't come yet. We're still dealing with the understanding of the crypto heist and of the economic slowdown, right? So we're still dealing with that. We've seen, by the way, which has sparked much of this selling, a cascading liquidations. Over $1.3 billion in bullish positions have been liquidated over the last, just handful just the last couple of weeks. So that's caused Bitcoin to break down below that technical level that we have been watching at around 90,000. We've also seen ETF outflows. We've seen spot Bitcoin ETFs have had a net outflow. IBIT and Fidelity's Bitcoin fund, they lost about $400 million in flows, or saw net outflows combined. In fact, yesterday, U.S. spot listed Bitcoin exchange traded funds had their second biggest outflows of the year. Now, remember, we were only like 6 weeks into the year, but nonetheless, it was still the second biggest outflow of the year yesterday. And then, of course, what could cause things to turn around here? Well, obviously, a reversal in the NASDAQ 100 would help risk assets, in my opinion. A policy shift from Trump on Bitcoin reserves could provide a bullish catalyst, I believe. And then we also have upcoming earnings tomorrow, NVIDIA. That could either make or break a lot of what's going on right now. Plus, we got some PCE inflation coming out later this week that could also influence sentiment. But let's just look real quickly at this halvings chart and talk about where we are in context. So we are still just we're only like a couple, 2 to 250 days in to the halving, okay? And there's still a long way to go. In the past cycles, after the 2020, I don't have the 2012, 2013 on this chart, but if you go back and look at that cycle, you'll see that we topped around about 1 year post halving, okay? And then if you go to 2016, 2017, it was at 18 months to the peak, about 525 days or something like that. And then if you look at the third halving, we peaked around 550 days in, so it was just about 18 months. And so now we're in the fourth halving, and we've gone about 240 days or so, 240 days. Okay, so we're not even really halfway to where we were in the past, and we're already sitting at a price we've never seen before. At 110, we've already hit a peak of 110, and so overall, we're seeing what I think is relatively normal price action. Okay, relatively normal. Take a look at this from 2021, then we're going to move on. 2021, we can see here that this was the last 4-year end of the 4-year cycle. And you can see here we don't go all the way through 2021 to see the peak that was hit. But as you'll see here, notice what happens. In November, we rally, right? In December, we have a little bit of a lull. In December, then we begin to rally again, right? And then in January, we have a lull here. Then notice what happens. in February, toward the end of February, we're sitting up here near, let's call it 58,000 or so. We moved from 58,000 in the last couple of weeks of February, from 58,000 all the way down to like 41,000. Now think about what that is. That's a huge. It doesn't look very big right here because you're seeing it in context. But if we were to zoom in on this, this is a brutal sell-off. When? At the end of February. When 2021, so exactly 4 years ago, we had a very big downdraft followed by a rally into March, right? And then some sideways grind for a while, and we're still not hitting the peak. So notice what I'm saying is that Bitcoin does not do this, right? It does not do this. It does this, right, along the way. So these sell-offs are very common, and remember, they're not fundamental sell-offs. It's not, oh, Bitcoin's encryption has been broken, or Bitcoin's overall protocol doesn't work anymore, or suddenly, oh, nobody wants to buy Bitcoin, or oh, Bitcoin has lost favor from all of the bulls. None of that is the story. The story is something separate, right? Which it's always something separate. And these offer opportunities to us if we have cash on the sidelines, which I would encourage you to be ready for moments like this if you want to, dollar cost average in, or however you do it. But I would encourage you not to let this kind of moment shake you out, because we are still very well in the 4-year cycle, and we're, I think, nowhere near the price we're going. That is my opinion. Now, also, one real quick thing before we move on. Binance.us. Remember Binance.us? We used to use that to buy cryptocurrencies. They went offline in February 2013. Suddenly, we couldn't buy from Bitcoin or from Binance anymore. Well, they resumed U.S. dollar deposits and withdrawals for the first time in 2 years, just recently. So that's good news. That if you still like to use Binance.us, you'd like to use it again, you'll be able to do that. So that's a positive development, showing some movement, I think, in the crypto space.